Movie Trades! I wanted to do a video analysis update of the stock market. We'll talk about the S&P, as well as the Dow, the DAX, the Nasdaq, Amazon, Facebook, Apple, Nvidia, AMD and Starbucks, Nike, Disney and Southwest, the emerging markets and RIG, Cleveland Cliffs, Tesla, Enphase Energy and First Solar, NEO, Alibaba, Netease, SOCL, Twitter, Snapchat, Roku, Square Cash, Bitcoin, Solana, and XRP. So let's get right into it. But before we do, I really want to apologize to our servicemen and women and their families for making a video about the stock market on Memorial Day. But my roommate is actually a family member of basically the entire, each branch of the armed forces. So she's out with her family today, and this way I get to make a video without bothering her. So that's good. Here is SPY. It forms a wave 1 and a wave 2. And then we have a big wave 3 that goes past the 161.8% extension of wave 1. I don't like to get too much mileage out of this, but we did predict that wave 3 would be at least the length of wave 1, place of the wave 2 low. So that Elliott wave voodoo, I'm not saying it always works, but it really, some people say Elliott wave keeps you out of bad trades. And it certainly did last year around this time. I believe that this was wave 3, and this is an ABC wave 4. We're at the 50 to 61.8% retracement. So we'll talk about what a possibly more aggressive count would be. I want to stick to the more conservative view that this is the wave 4 correction that ended, and this is a pretty important theme, where the length of wave A, place of the wave B high, was where wave C ended. There's a lot of charts, a lot of ETFs, where the length of wave A, put in around February, place of the wave B high, put in late March, was where wave C may have ended pretty recently. So the conservative view is that wave 5 will be the length of wave 1, place of the wave 4 low. That gives a target of 518. The more aggressive wave 5 target is that wave 5 will be the length of wave 3, place of the wave 4 low. That could take SPY up to the 540s and still be within a wave 5. But what's a really kind of moon boy look at SPY? And we'll talk about the Dow Jones and the DAX, why this might not be so moon boy after all. But what a possible count is, and what we're kind of seeing develop in other indices, is that this is all wave 1. And this is an ABC correction ending wave 2. We're getting ready to see SPY go beyond the lower 500s. Potentially. So how are we going to know if we can upgrade this count, right? Because now it just seems like we can just put the letters anywhere and the numbers anywhere. How are we going to know that this is the accurate count in the future? This is all a wave 1 from the March 2020 low, and this is wave 2. Well, we're going to use the weekly RSI, or at least I am. So the weekly RSI, there's a rule in Elliott wave theory that says wave 5 must end with momentum divergence. So I can't label this rally to the 500s if it occurs, a wave 5, if I see the weekly RSI go make a new high within the same cycle from the March 2020 low. So that means that the weekly RSI gets above 73.49 on bar chart, I'm going to count this all as wave 1 and wave 2. And we'll see with the Dow Jones and the DAX and the emerging markets how that's not too crazy. So here is the Dow DIA. I believe this is a 1, 2, 3, 4, 5 waves impulse from the low, and I'm using the RSI for this subdivision. I know some of the purists are going to get on me because wave 5 is shorter than wave 1. So, I think it's good to know the rules, but it is Elliott wave theory, and I'm using the RSI to really label the subdivision. Wave 1, wave 2, the highest reading on the RSI is usually wave 3 and wave 4, and then wave 5 is when you make that lower high on the RSI with the higher high. So anyway, I do believe this is either a wave 1 or a wave A. I think it's a wave 1. What I'm trying to show is that this is an incomplete bullish sequence. Whether someone believes this is wave 1 or wave A, and whether someone believes this is wave 2 or wave B, when we see, and I expect we will see, the DIA break above 369, whether we're looking for a wave C or a wave 3, the target is going to be the length of this rally, place of this low. So I want to see SPY above 380. I want to see the DIA above 297. We'll give better levels from other stocks we're about to go over, but this is just to show what maybe the more aggressive view could look like in the indices, that this is all wave 1 and wave 2, and we could see the DIA. I mean, I'm almost afraid to say this out loud, but we could see that the Dow Jones replicates this entire rally and goes and starts making a run to replicate it to the 490s, potentially, from the current levels. So if we're above 297, I think that's a good level to be above. This is either wave 1 or wave A. This is wave 2 or wave B. I expect we'll break a new high and look for a wave 3 or a wave C to end up at 492 in the long term. So we can see why they've made this correction quite difficult if that's the case. And if you're thinking puppy trades, that's, way too bullish, right? You've had a fun long weekend. Nope. Okay, let's look at the DAX. This is an ABC correction and then a wave 1 and an ABC wave 2 at the 50 to 61.8% retracement. The emerging markets and a lot of stocks we're about to go over, we are at the 50 to 61.8% retracement of the entire rally from March 2020. So a lot of people said, damn, I missed the March 2020 rally. I, did this or that. I wish I had bought because we had this crazy rally. Well, what the wave theory may be suggesting is that this was just wave 1, right? That wasn't even the biggest wave from the March 2020 low. This is wave 1 and wave 2. So I'm expecting the length of wave 1 placed at the wave 2 low will take many global indices, not just the DAX, but specifically the DAX, up to 43 for wave 3 before a shallow wave 4 that retests the wave 1 high and then a wave 5 higher. If wave 5 is the length of wave 1 placed at the wave 4 low, we could see the German stock market double. Now, this is a stock market. I'm not too familiar with Germany, but this is a pretty industrial kind of market. If we see the DAX go from 27 to 53, 54, then that means we probably saw a lot of value stocks do really well. And that means we probably saw inflation keep ripping. I wasn't really planning on pulling this out in this video, but a lot of people think that inflation going up is going to not coincide with the stock market going up. Now, I'll talk a lot about where I think the stock market is going, but this is my clearest answer for where I believe inflation is going. I wanted to touch on it a little bit. This is Palladium, PALL. I believe this is a wave 1 and a wave 2 from the 2020 low. From this low, it's another wave 1 and another wave 2 at the 78.6% retracement. Now, one kind of theme I want to point out, just kind of psychologically, is that we had a lot of stocks in the first quarter just completely break off from the S&P and form a wave 1. We'll talk about Cleveland Cliffs. I think a lot of uranium stocks fit in this category. But then recently, they've kind of recorrelated it and joined this sell-off for wave 2. So we're going to see a wave 3 setup in Palladium. I'm very curious to see if this wave 3 setup in Palladium occurs with what I believe will be many wave 3s across the market. I suspect it will. This is wave 1 and wave 2 at the 78.6% fib. Above 143, the length of wave 1 placed at the wave 2 low can take Palladium up to 327. So Palladium is positively correlated with inflation and with economic activity. So, I don't want to talk about politics, but I do think there's going to be a Biden boom. It might not be Biden, but I do think we're going to see an economic boom, and that's actually why inflation is going to go up, in my opinion. So a lot of people think it's going to be stagflation. I think it's going to be, kind of maybe the good inflation, where it's because economic activity is so robust that maybe the Fed actually does need to raise rates a little more to kind of cool it down. Anyway, that's going to get me in a lot of trouble. Anyway, this is the QQQ ETF, wave 1 and wave 2 from the 2018 low. So I really want to focus on it for a lot of these tech stocks from the 2018 low. This is wave 1 and wave 2, and this is a big wave 3 from the 2020 low. So what I think is really cool about some of these charts, this is almost identical to SMH. I think QQQ is a little more popular. But what I think is pretty cool about some of these charts is that if this does play out, where this is wave 3 and wave 4, then we might know already where the next crash is going to be. We might know already where the next crash is going to be. Hear me out. I think this is wave 1 and wave 2, and this is wave 3 and wave 4 at the 50% fib. So we have to find a wave 5 target. An Elliott wave principle, it's not a law, but it's a principle. It's a good way to find a target. is that wave 5 is either the length of wave 1 or the length of wave 3 placed at the wave 4 low. So if wave 5 is the length of wave 1 placed at the wave 4 low, then the Qs don't make a new high for wave 5. So that's probably not a good wave 5 target, because one of the laws in Elliott wave theory is that wave 5 has to break the wave 3 high. So I suspect if we do see the Qs go make a new all-time high, which I think is going to happen, that we're going to be looking for a wave 5 that is the length of wave 3 placed at the wave 4 low. And then that would give kind of the next, very scary time to be long, or at least too long, if we saw wave 3 be replicated for wave 5, and when we saw the Qs go up to 522, that would be 1, 2, 3, 4, 5 waves from the 2018 low. We'd be getting ready for a substantial ABC correction. So I think 258, that 61.8% fib, is a good level for the Qs. I posted about SMH recently, nearly identical chart. A pretty similar chart is Amazon. It's not quite exactly the same, but it's the same idea that from the 2018 low, 1, 2, 3, 4, 5 waves, and likely, and by the way, this is every XLY holding. XLY is the consumer discretionary ETF, Tesla, Nike, Starbucks, Home Depot, Amazon. This is a wave 1 and an ABC wave 2 for XLY's biggest component, I believe, last time I checked. So I think this is wave 1 and wave 2 at the 61.8 to 78.6% fib. So an extremely tight stop would be 1834. But the wider invalidation is all the way down at this wave 1 low of 1307, and a little tighter level is 1626. So I think 1626 is a great level to be above, because 1307 is too wide. And I suspect this is wave 1 and wave 2. The length of wave 1 placed at the wave 2 low says that Amazon has ended an ABC correction, where the length of wave A placed at the wave B high was where wave C ended. So we can see wave 1, wave 2, wave 3 replicate wave 1, and we can see Amazon go up to 4,490. Now, believe it or not, in this view, that would only be wave 3. We'd have a shallow wave 4 correction before a wave 5 higher. Okay, I don't really mean to go beyond Amazon doubling in this video, but I do think there's a path that takes Amazon, up to 4,490. That's huge for the entire e-commerce sector, which means it's huge for the entire growth sector. It's also big for big tech. It's also big for XLY. So we'll go over a few XLY holdings right now, but I think this is wave 1 and wave 2, where the 61.8 to 78.6% fib. I mean, this is quite literally the definition of a blue chip, especially in big tech, ending wave 2. And these opportunities are pretty rare. So that's just something to think about. Wave 1, wave 2, wave 3. We could see a pretty established company more than double for wave 3 before a shallow wave 4 and a wave 5 higher. If you think that's crazy, we'll talk about Meta right now. So this is the more conservative view. We'll go over what I think is the more accurate view. But the more conservative view of Facebook is that this is wave 1 and wave 2. This is another wave 1 and another wave 2. So as long as we're above the 2020 low, which is 137, the length of wave 1 placed at the wave 2 low gives a wave 3 target of 419 before a shallow wave 4 and a wave 5 higher. So we don't really need to go beyond that. I just kind of want to show, kind of just like Amazon, what it could look like from the 2018 low. The reason I don't really like showing this first is because it has a wider invalidation of 123. A lot of times if the invalidation is too wide, then people will, kind of rightfully object. So anyway, that first view I showed has a tighter invalidation of 137, but I think possibly the more accurate view, which is just slightly more aggressive, but I think it's a cleaner count. It lines up, with Amazon and a lot of these big tech names, is that from the 2018 low, we go 1, 2, 3, 4, 5 waves for wave 1. This is wave 2. It's basically the same thing, but has a wider invalidation of 123. And now we're looking for the entire rally from the 2018 low to get replicated for wave 3 before a shallow wave 4 and a wave 5 higher. So I think Facebook, by the way, massive holding of SOCL. So if Facebook is going up, that's a lot of evidence for Twitter and Snapchat. I think it's a lot of evidence for even foreign social media stocks like Netease, like Tencent, which are in SOCL. So here is Apple. Apple from this low, we're just going to start from the 2020 September low for Apple. I think this is a wave 1 and a wave 2. And then this is a big wave 3 This is an A, B, C correction wave 4 at the 61.8 to 78.6% fib. So people are going to say puppy trades. You know, you say that wave 2 is normally the wave that ends at the 61.8 to 78.6% fib. So the reason that I'll sometimes label a wave 4 at the 61.8 to 78.6% fib is to be conservative, right? If this is the wave 2, then everything that I'm about to say is conservative. So I'm going to keep this as a wave 3 and a wave 4 because the whole point of Elliott wave theory is to find the minimum expectation from an Elliott wave standpoint, all right? I can't tell any of this to my broker, all right? That's where risk management comes in. That's where options come in and position sizing and cash positions and all that stuff. But for the technical side, I'm just trying to find a minimum expectation. So I think this is a wave 1 and a wave 2. Conservatively, this is a wave 3 and a wave 4. The more aggressive view is that it's another wave 1 and another wave 2. A lot of people don't like when I say everything's an S. But anyway, I think this is a wave 3 and an ABC wave 4 at the 61.8 to 78.6% fib. So for Apple, we're looking for a wave 5 that will replicate wave 3. So if wave 5 is the length of wave 3, places the wave 4 low, it takes Apple to that big round number of 200. Now, a lot of people are going to say puppy trades, the Apple target's gone from 215 to 200. Okay, last year, a lot of people got mad when Apple broke one of these lows, and so the target was 180 by the end of the year, and then we had to kind of go step by step to the 150s, then to the 170s, then to the 180s. I do think eventually we'll get to the point where we're looking for Apple to go beyond 200. But until we get there, I think this is wave 1 and wave 2. This is wave 3 and wave 4. The length of wave 3 places the wave 4 low, says Apple above 130, takes it to 200 pretty quickly. Now, I'll just say this right now. If we really want to find a wave 5 target, what could happen in the future is that when this wave 5 is subdivided into 5 waves, it could look something like this, where we have a wave 1 and a wave 2, and then we can measure the size of wave 1 to find the wave 3 target before the wave 4 and the wave 5 higher. So we could be looking at higher targets for Apple in the future anyway. That's all I'm trying to say. Above 130, Apple, in my opinion, is going to 200 for wave 5. So here's Nvidia. Nvidia, another one from the 2018 low. I think this is a wave 1 and a wave 2. And conservatively, this is a wave 3 and an ABC wave 4. Now let's just get into the more aggressive view right off the bat. What's the more aggressive view? Well, it's kind of just like what we talked about with Facebook and Amazon, that from the 2018 low, this is all wave 1. That's wave 2. And the implications of that would be that the 2018 rally is getting ready to be replicated. So, we don't really need to make that argument right now. But I'm going to get to maybe a little more conservative view of the market or of Nvidia right now. I think that this is a wave 1 and a wave 2 from the 2018 low. So I don't like to get too much mileage out of this, but I basically predicted this entire rally in full. For wave 3, right around this time last year, someone said, this trade failed for a month, right? And then what happened for the next 5 or 6 months? Big tech exploded, right? So sometimes it takes a month. In this case, it's taken about 3, 4, 5 months. I do think we're going to see it. I think this is a wave 3 and an ABC wave 4 for Nvidia. Now, this is another one where I'm calling this a wave 4 to be a little conservative. Realistically, this wave 4 into the 78.6% retracement? No. Okay, but if I call this another wave 1 and another wave 2, then that would be extremely bullish. Anyway, I think this is a wave 1 and a wave 2. This is a wave 3 and an ABC correction. Wave 4, the length of wave A places wave B high is where wave C ends. So I'm looking for a wave 5 that is either the length of wave 1 or the length of wave 3 placed at the wave 4 low. So if wave 5 is the length of wave 1 placed at the wave 4 low, again, Nvidia wouldn't make a new high above the wave 3 high. So I suspect wave 5 will be the length of wave 3 placed at the wave 4 low. That's going to take Nvidia up to at least a new all-time high of the 380s. I think it's another one kind of similar to Apple, where what I'm expecting is that when Nvidia gets going, we'll have a wave 1 of a subdivision, and then we can measure wave 1 to find wave 2. We can measure the size of wave 1 to find the wave 3 target, because wave 3 is the 161.8% extension of wave 1 before a shallow wave 4 and a wave 5 higher. So it could look something like this, where for Nvidia and Apple, once they get going, we can use kind of the smaller counts to find more precise targets in time and price. So that's Nvidia. I think 115 is a pretty wide level to be above. We'll talk about with AMD. maybe why AMD, Enphase Energy, and Tesla are giving great levels to the downside. I don't think Nvidia is giving a great level to the downside right now, but I do like that this is an ABC correction where the length of wave A placed the wave B high is where wave C is ended. And obviously, I think, Apple and Tesla and, even just the stock market in general are going to be doing well. Not going to be betting against Nvidia during that time, or AMD. I think AMD forms a wave 1 and a wave 2 from this low that occurred in May of 2021. It was another one. It's all over the bar chart, straddle and strangle screener. I think I posted a setup right around here. Everyone said, ha, 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 and then it exploded. Okay, I think it's another one of those. I think this is a wave 1 and a wave 2. We've seen a ton of option buying on basically all of the big tech stocks, but I think this is a wave 1 and a wave 2. The length of wave 1 placed the wave 2 low can take, get my steps right. The length of wave 1 placed the wave 2 low gives a minimum wave 3 target of about 176 before a shallow wave 4 and a wave 5 higher. If wave 4 retests the wave 1 high and wave 5 is the length of wave 1 placed at the wave 4 low, there is this path that takes AMD just from the May low on 1, 2, 3, 4, 5 waves up into the mid 200s. So I think AMD above 72, there's a ton of upside reward. The risk is pretty clearly defined with this low. Now for AMD, I wanted to talk about what the bears think. Sometimes I think it's good to talk about what the bears think. The bears are gonna say that that's actually a wave A. This is wave B. So the bears are gonna hold out for a marginal new low where the length of wave A places the wave B high is where wave C ends. So the bears are looking for AMD to go down to 68. So I've talked about probably every stock before AMD, how we're at exactly where the length of wave A places the wave B high is where wave C is ended. So I don't think betting on more downside in AMD, especially for a wave C, is a good idea, but just wanted to throw that in there. Always good to know what the bears think, I think. So that's AMD. Here's Starbucks. Starbucks forms a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2 at the 61.8 to 78.6% dip. So I do kind of what I say I do, and I'm just gonna hold Starbucks. Like realistically, I'm not gonna stop out if it goes below 50. I will hold Starbucks forever. In my dividend growth portfolio. So anyway, Starbucks pays a nice dividend. It's in that dividend growth sector. It's in XLY. I've talked a lot about how I kind of love that consumer discretionary sector. And I think Starbucks is a really nice opportunity in it. To me, it's a clear 1, 2, 3, 4, 5 waves impulse. Now an ABC correction and a literal, this is just objectively a blue chip stock at the 61.8 to 78.6% fib of a 5 waves impulse. It's another one, just like the DAX, just like the emerging markets, just like Disney, where we have a wave 1 from the 2020 low. Now we're at the 61.8 to 78.6% fib. So they don't make these easy. They don't make these popular. But I do believe, we're seeing pretty rare opportunities where this is wave 1 and wave 2. The length of wave 1 places wave 2 low can take Starbucks up to 144 for a conservative wave 3 target before a shallow wave 4 that retests the wave 1 high. And wave 5 could be the length of wave 1 placed at the wave 4 low. That could take Starbucks up to the 200s. Now, for someone who's holding shares for a growing dividend, do I want Starbucks to just sprint up to 200? Or do I kind of want it to be a little slow, getting there? You can take your time going up to 200. I want to get those dividends. So I don't care if Starbucks, has a good time to the 200s or a long time to the 200s. And that's one of the benefits of dividend investing. And that's actually something that I'm going to be talking about a lot in the future of these videos. I think kind of to reward the people who have stuck around, that I've really been developing, a more quantitative system based on kind of income and all types of stuff. Anyway, I've got some exciting stuff planned that I've been working on for the past 4 or 5 months when there's been plenty of time to work on trading systems. Anyway, 1, 2, 3, 4, 5 wave 1, ABC wave 2 at the 61.8 to 78.6% fib. I think Starbucks is going to fill out the left side of the base, the right side of the base, and be on its way in the long term to the 200s. And this is a pretty rare opportunity. Howard Schultz, I always call it Howard Stern, but Howard Schultz, he got in basically at 72, 73. So he got in lower than me. I'm a little mad about that, but what can I say? Anyway, this is another XLY holding, Nike, right? Another one. In the future of Nike's at an all-time high, and I tell someone I bought Nike, they're not going to say, hey, why did you buy Nike? It's just going to make sense to them. Oh, yeah, Nike's one of those blue chips like Starbucks, like Disney, like, maybe some of the airlines will go over where it's going to be kind of obvious in hindsight. Oh, yeah, duh, it's Nike. Oh, yeah, duh, it's Apple. But it's hard to say duh at the 61.8% retracement. I think this is a 1, 2, 3, 4, 5 wave 1 for Nike and an ABC wave 2 at the 61.8% retracement. So I think above 85, that's 78.6% fib. That's great risk reward. This is wave 1 and wave 2. The length of wave 1 places the wave 2 low can take Nike up to 222 for a wave 3 target before a shallow wave 4 and a wave 5 higher. So this is also another one kind of similar to Starbucks where there's a little bit of a theme where we've had rampant inflation. Gas is going up every 5 minutes, right? I think what we could see is a little bit of follow the leader action where we wake up in an environment where it's no longer just oil. Companies that produce coffee, companies that produce clothing, right? Their products have become more expensive, and a lot of people think that's going to make their stock prices go down. What we just saw with oil was the opposite. Oil going up didn't make ExxonMobil go down. I know people are going to say, well, that's oil. That's very, but we see this a lot. We saw this last summer where everyone said that the semi shortage was going to make Tesla and Qualcomm crash. And Tesla and Qualcomm were on the bar chart straddle strangle screener all summer. And I said, I agree that semiconductors are getting expensive, but I don't think that's going to make Tesla and Qualcomm go down. And I think the options market, very similar to that time, was not betting on, Tesla and Qualcomm going down because of the semiconductor shortage. I think we're going to see that these more expensive products, that the companies that produce them, their stock prices actually go up. At least that's what the Elliott wave is suggesting. I think this is a wave 1 and a wave 2 at the 61.8% fib. We can see Nike in above 180, and we'll say, duh, right? It's Nike, and then it'll be at 222 on the shallow wave 4 and a wave 5 higher. So that's Nike. Here's Disney, the mouse, and we have a lot of other travel-related names. We have a lot of kind of whole sectors, right? This is an example of an entire sector being a genuinely rare opportunity. We can quantify that. This is a 30-year wave 1, right? Disney's inception was in 1987. So this is 1, 2, 3, 4, 5 waves from 1987 to 2020, right? So this is more than 30 years that this wave 1 took to play out. And then it's almost kind of like a gift that the entire wave 1 is corrected in a span of about 2 or 3 months for wave 2, right? This very quick wave 2, in my opinion, corrected this entire cycle. Wave 1, very quick wave 2, and I believe from the 2020 low. This is another wave 1, and this is a wave 2 at the 78.6% fib. So what I like about Disney is that there's a pretty clear invalidation, right? I can't call this another wave 1 and another wave 2 if Disney goes below 79. So I know that's getting far from kind of original times I've talked about Disney, but I've always looked at Disney in the long term. And I know that, we have this meme that we share where it's like, oh, this is where bulls become long-term investors. This is where, they have despair and then they sell at the low. For me, I'm always a long-term investor. I'm a long-term investor at the lows. I'm a long-term investor at the highs. And I'm a long-term investor in the middle. Okay, that's how dividends are compounded. That's how covered call ETFs are compounded. And I just kind of play the long game. There's no real point in doing statistical analysis if your time frame is 1 month, right? If your time frame is really, the next 30 days, you care about what's going to happen, next week or in the next 2 weeks, if someone's going to call you, a bag holder, there's no point in doing statistical analysis based on that because you have very little data. What are you going to say about, the 30-minute candles in the past month? There's not much to look at. I'd much rather be always looking at the weekly candles, the monthly candles, really smoothing out that data. So this is a wave 1 and a wave 2. I think this is another wave 1 and another wave 2. From this low, we can see a wave 3 of wave 3 begin. And that would imply that Disney going up to 223 is a conservative wave 3 target, because usually wave 3 is bigger than the length of wave 1. It's followed by a shallow wave 4 correction that retests the wave 1 high. And then wave 5 is the length of wave 1 placed at the wave 4 low. That could take Disney up to 315 in the big picture. Nearly triple its current price, but in my opinion, in the long term, that only ends wave 3. That only ends wave 3 in the big picture. This is wave 1 and wave 2, and a massive wave 3 is in progress in my opinion. That massive wave 3 ends when Disney goes wave 1, wave 2, wave 3, wave 4, wave 5, up to 315. That's going to end wave 3 with a long consolidation period for wave 4, but I do think ultimately we'll see Disney go on a wave 5 beyond 315 in the super long term. But anyway, here's Southwest Airlines. It's another one where it's an entire sector. It's not just Disney. It's not just Boeing. It's not just, it's the entire transportation sector, right? It's the entire transportation sector. That's a whole sector of necessities, right? Real things that, can they go out of business? Can they go bankrupt? Can they go to zero? Yeah, they can, right? But can all of the airlines go to zero? Like realistically, can American Airlines, Southwest Airlines, and JetBlue and Delta Airlines, can all 4 of those names really go to zero? I mean, if they do, we've kind of failed as a society. We're kind of, we're back in the dark ages if that happens. But good thing I'll have gold and silver at that point. But anyway, for Southwest, wave 1, ABC wave 2 at the 61.8% retracement. It's yet another stock, right? It's not just the DAX. It's not just the emerging markets. It's not just Disney. It's not just Starbucks. It's not just Nike. It's not just, I wish I could name 50 more off the top of my head. I probably could if I had my list, but we have a whole bunch of stocks that form a wave 1 from the 2020 low, ABC correction wave 2 at the 61.8% retracement. So I think above the 78.6% fib of 31.51, but I usually round down that decimal to that whole number. But anyway, above 31, there's gorgeous risk reward for Southwest. Wave 1, wave 2, the length of wave 1 placed at the wave 2 low takes it to 79 for, yes, a conservative wave 3 target before a shallow wave 4 that retests the wave 1 high. Then wave 5, that's the length of wave 1 placed at the wave 4 low. We don't need to talk about beyond that, but I do think the stage is set for, a 60, 70% rally in Southwest. And some of the more laggard airlines like JetBlue, like American Airlines, they could really outperform that. I think this is wave 1. Wave 2, we can see Southwest go up to 79 for wave 3 before a shallow wave 4 and a wave 5 higher. Here is the emerging markets, everyone's favorite ETF. I know that the emerging markets, that's when people really pay attention. That's a joke, obviously, but I think this is just really important to remind. If I do buy the emerging market, it probably won't be EEM, because the EM ETF has a pretty high expense ratio. I don't have it off the top of my head, but I think the Vanguard emerging market ETF has a much lower expense ratio than this. But I think this is, I'm mostly in China right now. But anyway, as far as foreign markets go, I don't know why I said that. For growth, I'm mostly in China. For a lot of the foreign stocks, for the material sector, and kind of the more inflation-related names, like the mining stocks, the energy stocks, I'm in other countries. But anyway, I don't know why I said that. This is a wave 1 and a wave 2 for the emerging markets. And then from the 2020 low, again, right, just like Southwest, just like Disney, just like Starbucks, just like the DAX, just like, XYZ consumer disco stock. Wave 1, wave 2, at the 60 to 61.8 to 78.6% retracement of the rally from the 2020 low. Wave 1, wave 2, 36 is pretty tight. A wider invalidation is 29, but this is the emerging markets. This is the rest of the world. This is literally the rest of the world, and it's at the 61.8% retracement. I think this is wave 1 and wave 2. We can see wave 3 replicate wave 1, take EM to 67, and that would be a conservative wave 3 target. It would be followed by a shallow wave 4 correction and a wave 5 higher. So if wave 4, let me label this a little bit. If the wave 3 target, the minimum wave 3 target is 67 before a shallow wave 4 that retests the wave 1 high, and then wave 5 is the length of wave 1 placed at the wave 4 low, So waves 1, 2, 3, 4, and 5 can take the EM ETF all the way up to 87. And in my opinion, that could end this blue wave 3 from this low that occurred in 2015, late 2015, early 2016. Wave 1, wave 2, and then all the way up at 87 is when that wave 3 would end, in my opinion. So 36 is a tight level, 29.98, very clear invalidation. You can see the whole world do well. So here I wanted to touch on oil a little bit. Here's Transocean. I think a big theme for oil is that some of the some of the laggards in the oil sector are going to follow the exploration stocks like XLE, holdings like Oxy, like ExxonMobil, where we saw those kind of already explode. I think we're going to see the laggards in the oil sector really start to play catch up, and then maybe that's when the blow off top will finally end. I think this is a 1, 2, 3, 4, 5 wave 1 for rig. This is a wave 2 at the 50 to 61.8% retracement. My expectation is that from 2.63, rig formed a wave 1 and a wave 2. It can get ready for a wave 3 of wave 3. Ultimately, I think rig's going up to 7.90. Call it 7 for wave 3 before a shallow wave 4 and a wave 5 higher. So if we're above 2.63, I think even just from this low, this could be wave 1 and wave 2. We can see Transocean get pretty explosive. So that's Transocean. Here is Cleveland Cliffs. I talked a little bit about how palladium and a lot of the war stocks went on this wave 1, and then they went on a wave 1 without the indices, and then during wave 2 they sold off with the indices. Now Palladium, now Cleveland Cliffs, they look like they're getting ready for a wave 3. I suspect this time that the wave 3 and the war stocks of the first quarter is actually going to coincide with a rally in the markets. That's what I expect. I think this is a 1, 2, 3, 4, 5 wave 1 for Cleveland Cliffs. This is an A, B, C correction at the 61.8 to 78.6% fib. 19 is a tight stop. 15.81 is a very wide but very clear invalidation. And I think there's a lot of upside above those levels. Wave 1 and wave 2 says that wave 3 can be replicated. Wave 3 can replicate wave 1 up to 38 before a shallow wave 4 and a wave 5 higher. So even just Cleveland Cliffs getting to 38, that actually is a minimum of wave 3 target, because a lot of times wave 3 is bigger than wave 1. We can see Cleveland Cliffs go up to 38. In my opinion, that'd just be wave 3. We'd have a shallow wave 4 and a wave 5 higher. So that's Cleveland Cliffs. Let's get into some fun stocks. Here is Tesla. I think the most important thing to understand about Tesla is that all that really matters is from the March low. So I'm actually just going to zoom. I don't need to zoom. But anyway, I'll just get the full count. I think this is a 1, 2, 3, 4, 5 waves impulse. I know I'm getting some mileage out of this, but Tesla's up, 400, 500% from, people actually said this POS doesn't move. It's boring. When Tesla was just kind of sideways like this. Anyway, and when it was just sideways like this, Tesla's boring. It's a POS. It doesn't move. At least now people aren't saying it's boring. But I think the first thing about Tesla, it's got a lot of supporting evidence from the stocks that we went over in the very beginning of this video. All the XLY stocks, all the tech stocks. Doesn't really make sense to be betting against Tesla. I think they're going to do well, which I do. And we also have some evidence for Tesla coming after we talk about it, especially from Enphase Energy, I think from First Solar as well. So Tesla forms a wave 1, and I think this is an A, B, C correction. It's another one where the length of wave A placed the wave B high looks like it's where wave C ended. So above 539, it's a little tight for Tesla's high beta. But I think we're getting ready for a pretty explosive wave 3. I've talked about this ad nauseum, but Tesla was on the bar chart, straddle and strangle screener all over the place in this range. It was all over the place in this range, and it's dwarfing those two scenarios in kind of this range. So that doesn't guarantee anything. They could certainly be playing a massive move to the downside, and that has to be prepared for. But I think above 539, this is wave 1, that's wave 2. We can see why they've made Tesla so difficult. This is wave 1 and wave 2. So the length of wave 1 placed at the wave 2 low gives a wave 3 target, a conservative wave 3 target, about 1,322. So that's the conservative wave 3 target, because wave 3 is usually the 161.8% extension of wave 1. But even if there's a shallow wave 4 that retests the wave 1 high, if wave 5 is the length of wave 1 placed at the wave 4 low, there is a path that takes Tesla up to the 1900s. So I don't want to get too, greedy, right? It's a 400%, 500%, whatever. But I do think this could be, one of those stocks where it's not quite done yet. Even though it's had a pretty spectacular rally, I think this is wave one in an ABC wave two. And if we're above 539, it's going to be one of those kind of explosive Tesla rallies where we go all the way up to 1,300, probably blow past 1,300, 1,322 for wave three, before a shallow wave four and a wave five higher. So remember, lots of supporting, charts with Tesla, right? Lots of XLY holdings that I've gone over, lots of tech holdings that I'm about to go over. I think that there's a lot of supporting evidence for Tesla. And if 539 is a little tight, then Enphase Energy, this is looking very pretty. And I said that I thought Enphase was looking pretty, and I didn't want to get excited, but now it's looking, it's almost looking inappropriately pretty. This is really nice. I'm going to get roasted if Enphase crashes, but I really think this looks good. 1, 2, 3, 4, 5 waves for Enphase Energy, and this is the biggest holding of, I'm just going to say it, literally every clean energy ETF. The biggest holding is Enphase Energy. I'm almost 100% sure that's accurate. And for QCLN, Enphase Energy, Tesla, and NEO are the 3 biggest holdings. So there is reason to believe that these 3 stocks are clearly correlated. They're going to move together. I think from this low, we saw Enphase Energy explode with Tesla and AMD from the May low. I think we're going to see it again. Wave 1 for Enphase and wave 2 from the May low. Then from this low in January of 2022, Enphase does a little well. It forms a wave 1 and a wave 2 at the 78.6% retracement. And now I don't even like to get short term, but I got a little cute and I said from this low, I think this is a wave 1 and a wave 2. We can see a wave 3 go up to the 161.8% extension of wave 1, which is 287 before a shallow wave 4 and a wave 5 higher. So I think that's in progress right now. I do not believe we'll see Enphase Energy go below 128. And this is a wave 3 of a wave 3 in progress. And obviously, if Enphase Energy is going up to the 280s in a beeline, right, it wouldn't be a good idea to bet against Tesla or First Solar or NEO during that time. I think this is wave 1 and wave 2. Wave 3 of wave 3 is in progress, and that means we should see, not tomorrow, but eventually, I think this summer, we'll see Enphase Energy at a new all-time high, and we probably wouldn't just be looking at Enphase Energy at a new all-time high in the clean energy sector. I think we'd also be seeing First Solar, do quite well. So I think that First Solar forms a wave 1 and a wave 2. It's one of the few stocks where we have several years of chart history. It's not like, like a lot of the Chinese EV, we have, 2 years. For First Solar, we've got a clear count from the May 2012, June 2012 low. I think this is a wave 1 and a wave 2. I believe this is another wave 1 and another wave 2. And then this rally broke above both of these highs. So that kind of helps confirm from an Elliott wave perspective that this was a wave 1 and a wave 2. This was another wave 1 and another wave 2. Now we're within a massive wave 3. We'll talk about where that wave 3 could end. I think from the March 2020 low, FSLR forms a wave 1, ends wave 2 at the 61.8% fib. So 48.73 is a little wide. First Solar has a pretty damn high beta, and I think it's got a lot of upside too. So above 48.73, I think this is wave 1 and wave 2. Let's see. And then we can see FSLR go into a wave 3 that goes to the 161.8% extension of the wave 1 rally. So this is yet another stock that forms a wave 1 from the 2020 low, and it's at the 61.8% fib. I think this is wave 1 and wave 2. We'll see FSLR go up to 181 for wave 3 before a shallow wave 4 and a wave 5 higher. Ultimately, waves 1, 2, 3, 4, and 5 says that this wave 3 from the 2017 low may not end until the 216 area for FSLR. So I know 48.73 is a little wide. I think realistically, Enphase Energy is giving much better levels to the downside than FSLR. But I think First Solar is just going to be one of those stocks. And this kind of gives the look I don't want to be grandiose or anything, but this kind of gives the look of this could be semiconductors a decade ago. And that's kind of why I've given so much attention to clean energy. I've taken smaller positions in the individual stocks, but this is the sector that I'm really focused on. I'm hedged to the downside with straddles on ICLN that I've gone over in previous videos. But I'm expecting that the call lot of those straddles are going to hit. I don't think the put lot's going to hit. I think that FSLR, I think Enphase Energy, I'm not really too focused on the short term, but I do think in the bigger picture, we could find out, we could wake up, a couple years from now and realize, yeah, that was the semiconductor sector in the early 2010s. And a lot of these stocks are basically just semiconductor stocks. I think some services have the FSLR and Enphase Energy are just in the semiconductor sector. Anyway, here is NEO. NEO forms a wave 1 and an ABC wave 2 at the 78.6% fib. So this is a stock that's recently IPO'd. A lot of stocks that recently IPO, they're extremely volatile, obviously. But when they mature, they could become household names in the future. They could kind of get that beta to, smooth out a little bit. We'll talk about a lot of Chinese stocks. I think in the clean energy sector specifically, NEO is going to move with Enphase Energy and Tesla if they rally together. And for solar, the three stocks we just went over, I think this is a 1, 2, 3, 4, 5 waves impulse from the 2019 low for NEO. So the implications of that, remember, in LA wave theory, wave 1's the measuring stick. So wave 1's the measuring stick the way that I do. Now, it's very interesting to note that some Elliott wave theorists will use the depth of the corrective waves to find the next impulse wave target. So some Elliott wave theorists will use, if they have a wave 4 correction, they'll take the depth of the wave 4 to find the wave 5 target. And the way that it works out is that the deeper the wave 4, when they do this, the further the wave 5 target is going to be. Basically, the deeper correction, it lures in more bears, it gets out more margin traders, and then it's followed by a further impulse. And I think that we're going to see that play out, where this is a wave 1, it's an ABC correction wave 2 at the 78.6% fib. Now, I use wave 1 as the measuring stick to find my targets. So the length of wave 1 placed at the wave 2 low could eventually give a wave 3 target in the upper 70s. Now, if this actually played out, that would not actually be the wave 3 target, because wave 3 is bigger than the length of wave 1. It's the 161.8% extension of wave 1. But what I'm trying to show, even if we had a wave 3 up to 77 in the long term, in the big picture, remember, this could be a sector similar to semiconductors a decade ago, in a very similar way that a lot of the ECAS stocks could be similar to, some of the, Amazons and MasterCards and Visas a decade ago. I think that the clean energy sector could be very similar to semiconductors a decade ago. I think this is wave 1 and an ABC wave 2 for NEO at the 78.6% fib. The length of wave 1 placed at the wave 2 low in the long term gives a wave 3 target of 77 before a shallow wave 4 and a wave 5 higher. Now, probably shouldn't do this, but if wave 4 retests the wave 1 high and wave 5 is the length of wave 1 placed at the wave 4 low, we could see a 0 get added to the current price. Anyway, there are stocks to 10x. And NEO, if you thought that was too bullish, is not going to be the only stock in this video that we talk about the possibility that in the big picture, this is a wave 1 and a wave 2, and a huge wave 3 takes it beyond the 70s before a shallow wave 4 and a wave 5 higher up into the lower hundreds. So realistically, I believe the institutions, I almost know, the institutions are hedging NEO and a lot of their clean energy positions with option straddles. Of course, I can't get the option straddle screener to load right now, but I've been looking at this every day for the past 2 years, and I suspect we've seen NEO, we've seen Tesla all over this again. Of course, I can't get it to load while I'm actually filming, but I do believe that they're hedging for the downside with option straddles, so that's why I have straddles on ICLN. And I'm also using position sizes. I took much smaller positions, specifically half the position size that I did, for instance, for a stock like Pfizer, for a stock like Camping World, for a stock, basically a value stock like Uranium Fuels. I took half the position size in Xpeng and Li Auto than I did in those names. So I am managing a lot of the risk in the growth names with position size. So a general rule of thumb that I use is a value stock gets twice the position size as a growth stock, just generally. But here is Alibaba. I actually took a full position in this one. Anyway, I think this is a 1, 2, 3, 4, 5 wave 1 for Alibaba. I'll talk about Netease in a second. I think it's almost a more important chart for Alibaba, and honestly for NEO too. But I think this is a wave 1 and a wave 2 at the 78.6% fib. The length of wave 1 places the wave 2 low would give kind of similar to NEO a wave 3 target that would be conservatively a new all-time high. Now, realistically, again, wave 3 is usually bigger than the length of wave 1 places the wave 2 low. It's followed by a shallow wave 4 correction and then a wave 5 higher. But I think Alibaba ultimately will look something like this, where wave 3 most likely is not just going to make a new marginal high at 337. Wave 3 usually goes to the 161.8% extension of wave 1. It's followed by a shallow wave 4 and a wave 5 higher. So what I'm trying to show is that even if there was a wave 4 that retests the wave 1 high in the future, getting pretty far ahead in the future, but even if there was a wave 4 that retested the wave 1 high, I suspect wave 5 would be the length of wave 1 placed at the wave 4 low. And in the big picture, we can see Alibaba go up to the 500. So I'm never going to sell Alibaba or my Chinese EV or any of that, basically, unless I have a massive return. And that's because I took smaller position sizes in those names, because I know they have extremely high betas. They're very volatile, but these opportunities I think are rare. And I think that we have very holistic, not just in China, but there's a whole lot of stocks, a whole lot of e-commerce stocks, a whole lot of growth stocks in general that look like very rare opportunities. I think this is a wave 1 and a wave 2 in the long term. A lot of people don't like the word long term because they can get called a bag holder in the short term, but I don't really care about that. That's not, in my priorities. Oh, is someone going to call me a bag holder? I think that this is potentially kind of similar to PayPal, kind of similar to Square Cash, an opportunity like Amazon, possibly MasterCard in 2009, 2010, where we wake up and everyone's like, oh, why didn't I buy Alibaba? Why didn't I buy PayPal? They're so obvious. And, it's not easy to call something a blue chip. It's not easy to talk about a stock's CAGR and a stock's moat at the 78.6% fib. All right, go Twitter search Shopify moat. I guarantee you there's 50,000 posts when it was at an all-time high, and there's probably none at the 78.6% fib. But we're seeing the entire e-commerce sector looks something like this. The Hang-Seng is the entire Chinese market, very similar to the emerging markets, extremely rare opportunity. This obviously goes into the analysis of NEO, but it's another one, just like EM. Wave 1 and a wave 2, and then from the 2008 low, another wave 1 and an ABC correction wave 2 at the 61.8% retracement. So this wave 1 took 10 years to develop. We have an ABC correction where the length of wave A placed the wave B high is where I believe wave C is ending at the 61.8% retracement. So this corrective wave has taken 3 years, 4 years to develop. This impulse wave took 10 years to develop. This is it's genuinely a rare opportunity, I think, in the Chinese market. This is wave 1 and wave 2. The length of wave 1 places the wave 2 low, can take the Hang-Seng up to 40K for a minimum wave 3 target in red before a shallow wave 4 and a wave 5 higher. If wave 4 retests the wave 1 high, and wave 5 is the length of wave 1 places the wave 4 low. In the big picture, we can see the Hang-Seng go from 20K to 55,000. And in my opinion, 55,000 is where this black wave 3 ends. So there is a lot of rarity, in my opinion, and I've taken advantage of it because the opportunity, I really think it could be something like possibly Amazon and MasterCard in the late 2000s. So here's Netease. It's a kind of similar idea. We have a wave 1 and a wave 2, and then this is from the 2018 low. A gorgeous 1, 2, 3, 4, 5 waves impulse Now, an ABC correction at the 61.8 to 78.6% fib. I think we hold that wick of 68. I think Netease is within wave 3 of wave 3. And for those of you who don't know, Netease is Chinese internet. It's the kind of Chinese internet stock. It's a big holding of a lot of, obviously, the Chinese ETFs, but even a lot of the growth sectors. I think another thing is that the Chinese stocks are a lot of evidence for the growth sector in general. We could see a huge opportunity in not just Chinese growth, but American growth. I think this is a wave 1 and a wave 2 at the 61.8% retracement. This is in SOCL, which we're about to go over. Wave 1, wave 2, wave 3 gives a minimum wave 3 target of 166 before a shallow wave 4 and a wave 5 higher. If wave 4 retests the wave 1 high and wave 5 is the length of wave 1, places the wave 4 low. Ultimately, Netease going to 234, in my opinion, is just going to end this black wave 3. So it wouldn't be it, right? It wouldn't be it. 237 would be great, but I don't think in the super big picture, that's where the fat lady sings. Anyway, here's SOCL. I think this is a wave 1 and an ABC wave 2. Go look at the biggest holdings. It's Twitter, it's Facebook, it's Tencent. It's basically half American social media at the top, and it's half Chinese social media at the top. So that's obviously not, perfect, but I think SOCL is a beautiful look at kind of this market. One ABC wave 2. I think another wave 1 and a wave 2 is a 78.6% fib. Now, I can't tell this to my broker, but I think there's a little bit of evidence from this relative strength index down here on the monthly RSI that we have about 10 years of chart history, and this high that was made in February of 2021 was the highest reading on the SOCL monthly RSI. What that suggests is that a wave 5 has not occurred. So remember, the rule is that in Elliott wave theory, and I just usually stick to the weekly RSI and the monthly RSI for this, within the same cycle, a wave 5 must end with momentum divergence. So within any cycle, this high that occurred in February of 2021 was the highest reading on the monthly RSI for SOCL. All that hints at is that wasn't a massive wave 5 that occurred. There's a lot of other reasons why this probably wasn't a massive wave 5 that occurred. But I think it was another wave 1, and now we have a wave 2 at the 78.6% fib. We can see SOCL enter wave 3 of wave 3. The length of wave 1 places the wave 2 low, says above 24.57. SOCL can go to 86 before shallow wave 4 and a wave 5 higher. Here's Twitter. Twitter did not get halted. I looked like a little dummy for saying that. I'll just roast myself. I thought when Twitter was just sideways like this, that because it had gotten bought, it was halted. So that happened to me with Slack one time, where Slack was just sideways, and I was like, what's going on? And I found out, it got bought. It's halted. I was like, oh, okay, so I'm kind of an idiot. But here's Twitter. It is getting bought, or maybe I don't care if it gets bought, but the count suggests don't bet against it. And there is a little bit of an interesting thing, because Elon Musk, I think this just kind of shows that Musk will buy Twitter, right? Maybe it won't, right? Maybe Twitter's going to explode because Musk doesn't buy it. That would be interesting, right? Sometimes, I don't know. I think that this is clearly a wave 1 and a wave 2. If the narrative now is that if the Twitter deal goes through, that's going to be good for Twitter, then I can almost assure that deal is going through if it plays out like that. Now, they could say that Musk not buying it, because he's a pretty zany guy, was actually good for Twitter. I don't see that. But I think we know that deal is going through, I think. Anyway, if you guys want some of my big predictions outside of the market, I think that the Los Angeles Angels will win the 2022 World Series. And I do not watch baseball. I'm not going to watch any of it. I don't care. I watch a little bit of football. But I believe that the Los Angeles Angels will win the 2022 World Series. So that's the only other non-stock market prediction I'll make in this video. But I also think that Twitter is going to get bought by Musk. If the narrative is that Musk buying Twitter is going to make the stock price go up, then to me, that's pretty clear right here. This is 1, 2, 3, 4, 5 waves. And this is an ABC Wave 2 at the 78.6% fib. And I saw Twitter all over the bar chart. Yes, the bar chart straddle and strangle screener. And I said, hey, it looks like Twitter is getting ready for something. And then all of a sudden, it went up. So obviously, I'm not perfect. I don't pretend to be perfect. Never said that. I appreciate the high expectations that I'm given. But Twitter on the bar chart straddle and strangle screener right before Elon Musk buys it. Come on now. That's kind of like all the oil stocks being on that one screener before the, never mind. But I think this is a wave 1 and a wave 2. The length of wave 1 placed at the wave 2 low can take Twitter up to 92 before a shallow wave 4 and a wave 5 higher. Twitter in SOCL, Twitter a social media stock, Twitter a growth stock. So Snapchat, someone said Snapchat, when Snapchat went down, I got a kick out of this. This is a little inappropriate, but I got a kick out of this. When Snapchat went down on this candle, someone said, well, of course Snap's going down. It was made to send pictures of inappropriate parts to people. I just got a real big laugh out of that. Anyway, I think that Snapchat is more than a sexting app. Okay, at least I think that's what the market thinks. This is a 1, 2, 3, 4, 5 wave 1. And this is a wave 2 at the 78.6% fib. So Snapchat is a social media stock. It is going to move with Facebook and Twitter. Now, it's not going to do it every day, every single tick that, remember, data analysis is all about over time. Over the long term, I think that we're going to see certainly almost that Snapchat, Twitter, and Facebook move in the same direction, right? So if Facebook's wave 1, wave 2, wave 3 explosion, and Twitter's wave 1, wave 2, wave 3 explosion, then Snapchat's probably not going to zero. Maybe. I think this is a 1, 2, 3, 4, 5 wave 1. This is wave 2 at the 78.6% fib. Now, there's really not a great level to trade above. What some of the wave theorists will say, wait for a wave 1 to develop, buy the wave 2 against the low, and then go from there. Nothing wrong with that. And I think for a lot of the growth stocks that are getting left out of this video, that may be the best way to go. I'm going to keep holding them. I'm going to keep holding them because they've recently IPO'd, and I just kind of acknowledge that they're risky. They're going to raid stops, and I manage the risk with position size for growth anyway. But I think this is wave 1 and wave 2. I think with all the evidence from Twitter and Facebook, very silly to bet against Snap right now. And I think this is wave 1 and wave 2. Wave 3 to 90 in the long term, I expect to be conservative. So maybe I'll throw in another prediction. I think this is going to be, we're going to see the metaverse come to life. I think they gave us the metaverse at like the very tippy top of a lot of growth and tech. They're like, oh yeah, the metaverse, but I think that's an actual real thing. And I think that this is going to be one of the metaverse stocks. That's just kind of what I think. 1, 2, 3, 4, 5. Because what else could drive Snap higher? What else could realistically drive Snap from 15 to 90? That's a 600% rally. I mean, it would have to be the metaverse, right? It can't be because they got, a higher resolution camera. But I think this is a wave 1 and a wave 2. We're going to see Snap in the 90s one day. And that, in my opinion, is going to be a conservative wave 3 target before a shallow wave 4 and a wave 5 higher. And it's not just Snap. It's not just the social media stocks. It's not just China. It's everywhere. It's literally everywhere. The rarity, not the rarity, that's kind of cliche, but just this deep correction, it's hard to beat the market without taking advantage of volatility. Like, realistically, if someone's really trying to beat just buying and holding SPY, it's going to be almost impossible to do that statistically without taking advantage of volatility. And if someone doesn't want to take advantage of volatility, in my humble, unprofessional opinion, you're not going to beat SPY. You won't. Anyway, 1, 2, 3, 4, 5 waves for Roku. And I think this is an ABC correction wave 2 at the 78.6% fib. Is it worth noting that I predicted that Roku would explode from this level? Probably not right now, because it's actually basically at that level right now. But this is one of those stocks that could be a recent IPO, giving the one of many. I mean, even if we just look at Roku right now, we can see another 78.6% retracement right here, right? This is another one. The growth stocks do this, right? They don't write about this in the Substacks. They don't write about this in the Discords. They don't write about this in the whatever, but growth stocks do this all the time. 176 to 60. All right, that's a 65, 70% loss of value, right? The deeper this correction was, the further the impulse. Anyway, I think this is on a bigger scale, kind of a similar opportunity. Wave 1, ABC wave 2 at the 78.6% retracement. For Roku, 58, pretty damn wide. Now, if we got closer to it, that would be extremely nice risk reward. But I think Roku, at least for me, I'm managing risk and growth with position size and with option straddles, but I don't have an option straddle on Roku. But anyway, I think this is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2. What some of the purists will say, wait for the wave 1, buy the wave 2 against the low for the explosion. I kind of just acknowledge the volatility. I embrace the volatility, and I kind of prepare for it by having a long list of other growth stocks and a long list of other kind of Roku related names. I'm like, all right, well, if we really do keep going down, I've got a long list of stocks I'll buy into. But I think this is a wave 1 and a wave 2 at the 78.6% retracement. I think Roku is Netflix in 2011. I'll say it. This is wave 1, wave 2. You know, a lot of people say, why didn't I buy Amazon in 1990 whatever? Why didn't I buy Netflix in 2011? Why did I miss all these stocks? It's because you're afraid of volatility. It's because you're afraid of being called a bag holder, and it's because you think that because a stock has a really high upside that should get the largest position, when it's really the opposite. It's really the opposite. If a stock has a crazy upside, crazy beta, like a crazy beta and a crazy upside, like, you know, then that gets the smaller position. Why would I need to invest all my money in Roku if I think that a 0 is going to be added to the current price? I can invest a small amount of money in Roku and really benefit. But I'll tell you what, I'm not going to make any money from Roku if I'm worried about someone calling me a bag holder in the future. I do believe this is wave 1 and wave 2. This is Netflix in 2011. We're going to see a massive wave 3. And it's not going to be alone. It's not going to be alone. Square Cash is another one. Wave 1, ABC wave 2, another wave 1, and a wave 2 at the 78.6% fib. This 65, that's not a bad level. But the invalidation is this 2020 low of 32. We're still kind of far from that. So I think SOCL for kind of some of these growth stocks that have this big wave 1 and a wave 2, it's kind of the only ETF that's really giving a nice low to trade against. So I think SOCL gives a nice invalidation level of that 2020 low for a lot of growth. But I think Square Cash is a very pretty wave 1, ABC wave 2. This is another wave 1 and another wave 2. I think we're going to see wave 3 of wave 3 develop, not just for Roku, not just for Twitter, not just for Facebook, not just for Snapchat, not just for a lot of these growth names. We're going to see, this might have been 2011. This might have been tech in 2009. Why didn't I buy Amazon in the 90s? Why didn't I buy Netflix in 2011? Why didn't I buy Alibaba in 2022? Why didn't I buy Square Cash in 2022? Oh, it's because I was afraid of being called a bag holder in 2021. Wave 1, wave 2. The length of wave 1 places the wave 2 low. Can take Square up to 323 before a shallow wave 4 and a wave 5 higher. Here is Bitcoin, Solana, and Ripple. I think Bitcoin, I'll say it, it's up, 300, 400, 500% from these kind of levels. Anyway, it's not like we haven't seen these high beta, high volatility names explode. Okay, I know that there's lots of people who love commenting in all caps under my videos, but I would engage with you, but I just know you're going to be gone. Right? You know how upset I was? Like, realistically, just let me go on. You know how upset I was? I'm just getting roasted and trolled and all this stuff in freaking 20. I'm just getting so much taunts. Remember Billy? Billy was like, you're a furu. We're going to retrace this whole rally, right? And then SPY explodes to 460 and everyone's gone, right? Everyone's gone. So I'm glad that you're here now. I'm glad that you're here now in all caps. But, I'm not going to engage with you because I know you're going to be gone by the time SPY is in the upper 500s. right? You're going to be gone by the time Amazon's in the 4,000s, right? So why would I engage with you now? Why would I listen to your BS, your all caps, whatever, when I just know that when Amazon's at 4,400, you're going to be gone. You're going to be like Billy, who, just make a new account. I don't give a shit. I mean, really, this is what happens every time. It's really what happens every time. You predict SPY going from the 320s to the 460s, 470s, 480s, everyone's gone. You predict Tesla. You predict what? You predict Tesla going from 150 to 800, and everyone's gone, right? You know how much crap I was getting when I was saying the Tesla was going to the moon before the election? I'm saying all these stocks are going to the moon. People were calling me the kid at the bus stop over oil, right? Remember this one? Wait a minute. Let's not just... The point is, I'm not going to engage with people trolling right now, because every time, I've been around for a little bit. I'm not like some seasoned vet, but every time that you guys come out in all caps, oh, this guy's a furu, this guy's a, he's a pumper. Like I'm going to move the stock price of something. Whenever it explodes, you leave, right? So it's a waste of my time, right? I've gotten roasted time and time again for predictions and, Bitcoin, right? Bitcoin from 10K to 30K. Tesla from 150 to what? I mean, SPY for a year. For a whole damn year, I said SPY was going to go the length of wave 1, place of the wave 2. It was going to go up to 460, and anyone who shorted was going to look like a fool. All right? And the point is not that all of them play out. The point is not that any of them play out. The point is that I'm just not going to engage with the people trolling at these little lows, because I know you're going to be gone. I've been through a couple of these bull cycles, and you just leave. Right? If you don't leave, then maybe the next time we have a big pullback, maybe when the Qs go up to the 520s, I'll tell you what. When the Qs get to the 520s, if the people trolling and the people in all caps, if they're still here, then I'll engage with you in the ABC correction from the 520s. I promise. If you're still here when the Qs are in the 500s, tweeting in all caps, commenting in all caps, calling me a furu and a whatever, I'll engage with you. But I know you're not going to be here. Because you left for a year. Anyway, that's a little bit of a rant. I think I've deserved to go on a couple damn rants. It's not just, one or two stocks, but the whole damn market. What? Literally last year in May. Oh man, there's no rest for the wicked. Literally, Nvidia from the 100s, and I didn't just predict that Nvidia was going to explode from this level, but all these levels that have had stock splits since. So I can't even really remember the numbers because they keep changing. We have so many stock splits, but Nvidia for a year, I didn't just say Nvidia was going to explode at this level. I came out on all these little micro dips. I said, oh, it's not done. Anyway, you got the nerve to come out and say, oh, well, ARK fell below the May low. It's like, man, good Lord. No wonder the divorce rate is so high, man. Jeez. Oh, man. Before we get into Bitcoin, oh, man. I'm not sure if I can post this one. Before we get into the Bitcoins, I think Moderna, I think some of these this isn't really related to anything I just went over. It's a little bit of a growth name, but I think Moderna, I think Pfizer, I think Novavax, they may be supporting the idea that the 2020 narrative isn't done. So I'm not saying that I know what's going to happen with what Dr. Fauci is going to say in 5 minutes, but I think that Moderna, Novavax, and Pfizer Pfizer is not quite this. It's a little more of a dividend kind of lower beta stock. But Moderna and Novavax, they really kind of support this idea that they'd go on this huge wave 1 from 2019 to 2021. This was a huge wave 1, and this is an ABC wave 2 possibly ending. So we haven't, for Moderna, reached the length of wave A, place of the wave B high, being where wave C ended. at 90. So if Moderna got to 90, for me, that's where second mortgages and kidneys go in, where, kidneys start getting sold and, but Moderna below 90, that's kind of all in for me. I'll go all in Moderna if it goes below 90. But I don't think it's going to go below 90. I think this is a truncated wave C where we haven't reached the length of wave A, place of the wave B, being where wave C ended yet. But I think that the people waiting for Moderna to go below 90, I think they're just going to be they're going to be twirling their thumbs because I don't think that's going to happen. I think this is a wave 1 and a wave 2. This high that was made, the highest reading on the weekly RSI for mRNA suggests Moderna, that wasn't it. And I think this is a wave 1 and a wave 2. I wanted to touch on the biotech sector a little bit because it's kind of a growth-related name. And it's kind of a sector that I've kind of neglected. I haven't really talked too much about biotech. But I think this is a wave 1 and a wave 2. This may be in that little more holistic view of growth that some of those 2020 stocks aren't done. So I think we can see ultimately extremely high beta, extremely risky. But I do think we're going to see Moderna go up into the 500s, the upper 500s for wave 3 before a shallow wave 4 and a wave 5 higher. If it got below 90, I'll send my kidney to the cartel. But here's Bitcoin. I think this is a 1, 2, 3, 4, 5 wave 1 for Bitcoin. And this is a wave 2 at the 61% fib. Now, we haven't reached what do the bears think about Bitcoin? Well, the bears think this is an ABC correction. So since this is wave A, they think that this is wave A. So they're calling this wave B. The bears are looking for Bitcoin to go on a wave C. That's the length of wave A placed at the wave B high to be where wave C ends. So they're looking for this. Okay. I don't think Bitcoin's going below 20K. But if Bitcoin did go below 20K, to me, that's all in. That's where I actually might literally sell an organ if we get Bitcoin below 17K. I wouldn't need to sell an organ, but I would probably just do it, for the content. But anyway, I don't think that people waiting on Bitcoin to go below 20K, that people in hell want ice water. People in the market want Bitcoin to go below 20K. I don't think it's going to happen. I think this is a 1, 2, 3, 4, 5 wave 1. This is wave 2 at the 61.8% fib. So I spent, probably an hour before I went on that little rant talking about how I think growth is a huge opportunity. It's eCash specifically, but a lot of these growth names look incredible. We've seen Bitcoin heavily correlated with the Nasdaq for a long time. I thought it was so funny. We had like one day where the Nasdaq and Bitcoin weren't correlated, and people were like, "Oh, it's an ish coin, right? There's no correlation." Correlations in basically all statistical analysis is worth a lot if it's over a long period of time, and it's completely worthless if the time horizon is 24 hours. So if you're looking for every single day in every single 24-hour period that Bitcoin and the Nasdaq are going to move together, then you're lost. You should literally just go try to bet on how many points the Suns are going to score, or who's in the finals. I don't even know. But if that's really how you think that it's every day, Bitcoin and the Nasdaq aren't moving, together in a 30-minute time interval, then that means they weren't correlated. Then statistical analysis, that's not for you, right? You're literally better off gambling. But I do think that over time, it's kind of silly to bet against Bitcoin, thinking the Nasdaq can go up to the 500s. Thinking that a lot of these growth stocks like Square could be huge opportunities, but also even a lot of these other altcoins. So I'll talk about what I think. 78.6% fib of 17.1K is a little wide. So what some of the purists will say, wait for wave 1, buy the wave 2 for waves 3, 4, and 5. All right, that's what the purists are going to say. I'm not saying that's a bad idea. I think a better idea is to embrace the volatility, which is what I've done with crypto. And another good idea, at least something that I've taken advantage of, is buying the freaking dips. Because when you buy the dips, that's the best protection against the future crash, right? Buying in the 10K range is the best protection for a crash to 30K from 68K, right? Just like buying SPY in the 320s is the best protection for a crash to the 380s from the 470s. So a lot of times the best defense is a good offense. The best offense is a good defense. So I think that, position sizing is a really, great way to manage risk for me. Because for me, I see the bears saying that Bitcoin is going to go to 17K, and I'm like, all right, then I'll just literally sell everything I have and buy Bitcoin if it goes to 17K. But I think this is wave one and wave two. I don't think waiting on 17K is going to be a good idea. The length of wave one placed at the wave two low can take Bitcoin up to 91K before a shallow wave four and a wave five higher. If wave four beats has the wave one high, wave five is the length of wave one placed at the wave four low. There is the path to take the Bitcoin into the mid 100K range, the lower 100K range. I want to talk about above 17.18 or 17,000. That 78.6% fib is a great level to be above. I think that realistically, though, this is crypto, and position sizing will be the only really effective way. Some will say wait for wave one, buy the wave two for waves 3, 4, and 5. That's one way to do it. I kind of prefer to embrace the volatility, but this is Solana. This is kind of, this is another example of not just growth, but e-commerce, e-cash, doing a clear 1, 2, 3, 4, 5 waves impulse, and an extremely high beta, high risk sector going to the 78.6% fib. For Solana, there's not really a useful low. These wave 2 lows even of 19 are too wide. So I really do practice what I preach, managing risk with position sizing in these extremely kind of high beta, high risk names. And a lot of people, they do the opposite. They take the biggest positions they can because they hear, oh, Solana can go up to 300 for wave 3 before a shallow wave 4, the retest the wave 1 high, and then a wave 5 up to 500. So that means I'm going to go all in. No, it's the opposite. If I think Solana can have a zero, even more than a zero, because I think that ultimately instead of the Solana can go up to the 500s. So that's more than 10x the current price. If I think Solana can 10x, then I'm not going to take a big position. I'm going to take a small position because if I'm even partially right, I've doubled my money by the time we get to 100. And then by the time, we get to 250, right, I've 3x, 4x, 5x. So I can take, a third or even half the position size that I normally would in a value stock. Because if I'm even partially right, Solana would double by the time it's at 100. I think this is a wave 1 and a wave 2. We'll see Solana go on a wave 3 up to the 300s before a shallow wave 4 that retests the wave 1 high, and then a wave 5 higher up to the 500s. So this is not where they make crypto easy. This is not where people who, are afraid of, being called a bag holder or taking big position sizes, this isn't going to go well for them. But I do think this is going to be one of those huge opportunities, could be something like this opportunity even, where it's like, oh, that's wave 1 and wave 2, and then wait, that's what wave 3 ended up being. Here is Ripple. It's a very similar idea where these altcoins are almost asymmetric risk, where even if they went to zero, even if they pulled a Luna, if Ripple went to zero, it loses 39 cents in value. If Ripple does what I think it's going to do, then at the very minimum it would make a new all-time high, go above $3.50. So even right there, I mean, the risk reward is still asymmetric to the upside. But I think for Ripple, it's just like Solana. It's a wave 1 and a wave 2. I think this is another wave 1 and another wave 2 at the 78.6% fib. It's another one where, having the stop be 17 cents is pretty futile. It would be much wiser, in my opinion, to take a smaller position size and then manage the risk up front. Because I think this is wave 1 and wave 2. Ripple's going to go even in a smaller degree count on a wave 3 up to 3 before a shallow wave 4 and a wave 5 higher. I think there's a whole lot of altcoins, a whole lot of cryptocurrencies that could rally with it.